much. And traders, welcome to broadcast this afternoon. My name is Scott Malatesta, and I'm the U.S. Vice President with TradeNet. And we are all about learning, trading, and gaining. We operate on a global platform, and each and every day we have thousands of traders join us each day in our trading room and trade along with myself and our President, Mayor Barack, each and every day. And we're just really excited to be able to have the opportunity today to come to you live and really to deliver a lesson that we go over in one of our Star Trader programs here. So several of you that have joined us today that have been involved in TradeNet and have gone through the Star Trader course, you'll recognize this lesson. This is lesson number 6. It's one of my favorite lessons. It's one that I talk about all the time, and it's really the psychology of trading. It's one that, quite fairly, a lot of people think to themselves that, you know, Scott, it's all about entry and exit. It's all about taking a trade and getting into the right number. Well, I'll really step you through the way that a professional trader trades and the psychology around that. And I hope you enjoy the lesson today, as this is a lesson that's very favorable amongst our traders out there, and it's one that I'm excited to bring to you. And just a quick background on myself: I've been trading for over 25 years, and I've been trading independently now for the last 8 years, which means deriving my income professionally through trading. And as I start to what we call give back in our training, we do multiple training sessions every single week at TradeNet. So we are excited about this, and we're excited for the opportunity to partner and to be able to share this trading psychology. And one more shameless plug, Scott, we're about ready to launch the World Series of Day Trading. And for those of you that aren't part of TradeNet, you could go to tradenet.com, and we're about ready to power that World Series of Day Trading. And if you think about it, it's just like the World Series of Poker. We're going to be handing out over $3 million of account value to our winners, and this is a global trading competition which starts September 17th. So we're excited about that. Okay, traders, let's go in and let's take a little look to see what we are going to be covering today. We're going to be talking about the psychological training for traders, the market psychology. We're going to be talking about fear and greed. It's the yin and the yang of trading, and it makes me really excited to be able to deliver that, because we all go through that. We all have fear. We all have greed in our trading, and without a little bit of greed, we're not able to really be traders, right? We have to have a little bit of it, but too much greed is really a detriment to our trading. Then we're going to talk about common ways to lose, about how we deal with losses. Each individual trader deals with their losses on almost a daily basis, because very few days do we go, 5-0, 6-0, 10-0, where we don't have a small loss during the day. And how we actually take care of that, and how we actually recover from losing days or losing trades, and how we deal with those losses, and how we actually gain from that experience. You see, traders, each and every day and each and every week and month that we have losing days, these should be noted so that we're able to learn from our losing days and to be able to take that next step, to be able to get better, to be able to understand what it takes to become a professional trader, and to also understand that, hey, look, we've just had a loss, and how and why did we have a loss, and what it's going to take to get back on track, and what can we learn from that. Okay, so let's move forward and talk about the secret to success. You see, traders, many traders and many first-time traders think of, boy, you know what, if I had a great entry and I'm a great technician in the chart, I'm going to succeed. But is it that easy? Or it's about financial management. It's about, how do I manage my account? How do I manage my share size? How do I manage the things that I need to do on a day-to-day basis? But you see, traders, this is only 40% of the success or the secret sauce that goes into trading. 60% of the secret of being a successful trader is all about having a strong psychological presence and a grip on who you are and how you trade. But most traders, and most beginner and novice traders, really focus on the first 10% of the secret of success. They're really focused on the entry. They're really focused on the exit. They're really focused on technical points, whether it's pivot points or when to get in and when to get out. You see, we need to shift that, and we need to be looking at the psychological abilities of trading. And we're going to get into that today, and I think you're going to like what we learn and how we do it here at TradeNet. So let me take you through kind of the stages of development. Let me take you through that path of going from an amateur trader or a beginning trader to a professional, okay? And what we've come to understand is that there's all different ways to make it. Some people try to make it by, the quick way. Let's just say, whatever's the quickest way to get rich, I'm going to do, okay? And the amateur trader's objective is to get rich fast, okay? All the beginning traders have the illusions of grandeur where they see many people on YouTube, many traders in the trading world, and many people that go out there and make a living at becoming a trader. They see all the riches, they see the cars, they see the homes, they see the people putting themselves over the top. But a good trader must learn how to focus on really the correct trading practices. Okay, because those practices, that backbone of who you are as a trader will eventually lead to success. The very first objective and the most important objective when you're trading is long-term survival. Traders, in order to become a successful trader, you don't trade for 1 day, 1 week, 1 month, okay? It's month after month, year after year to become a long-term professional trader. And if you're not here tomorrow or next week or next month, how do you expect to become a professional? You're out of the game. You've lost your account, okay? You can't do that. So the very first objective is for long-term survival. Long-term survival. You've got to be in the game to be able to talk and to be able to walk and to be able to trade long-term. Now, the second objective is what? Consistent accumulation of capital. And the key to this, the key to it is the consistency. Okay, it's the consistency. Okay, it's coming in each day and consistently making profits. Consistently making profits. That accumulation of capital, that accumulation of profit leads to a snowball effect in your account. And that consistency, that accumulation over time builds a strong and a large account. The third and the last objective is making high profits. So think about this. First, we have to survive. Second, we have to be consistent. And third, we have to make high profits. So going from step 2, or the second objective, to the third objective is really turning up the notch. It's the difference of you becoming consistent trading 100 shares, 200 shares, 500 shares, whatever that magic number is where you feel very comfortable in your trades. It's the difference from going there to adding a 0 at the end of those shares. So from going from 100 shares or 200 shares and being a consistently profitable trader to making the step to trading 400 shares, 800 shares, 1,000 shares, 2,000 shares. That's where you start to enjoy making high profits. And most traders need to go through all three of these stages. But first and foremost is survival. Because without survival, you're not there on day 2 or day 3 or month 1 or month 2 or year 1 or year 2 and so on and so forth. Okay? The key of it all is that we need to survive, we need to be consistent, and we need to then focus on taking our trading to the next level. So let's talk a little bit about market psychology, about what the market psychology is telling us on a day-to-day basis. So there's trading psychology, about how we trade and about how we think and the fear and the greed, but there's also an element that people forget about, and that's called market psychology. So market psychology, traders, is really the overall sentiment or that feeling in the markets, okay, the feeling that the markets and really all of us that we participate in experience at any particular time. So you have that feeling. For instance, I'll give you an example of when President Trump comes out with a tweet or something happens midday and the market either advances or it crashes. That psychology, that overall sentiment, that overall feeling that you get, okay, from the market, and all of us that participate in it, is called the market psychology. That's that feeling or overall sentiment of the markets. And price is a psychological event. It's really that moment in time, it's that balance of opinion between the bull and the bear, the bid and the ask. Okay, so the psychological event, when you're looking at your level 2 perhaps, or when you're looking at your level 1, or you're getting involved in a trade, the price brings on a psychological event. It talks to your mind. It says there's a bid and an ask. There's somebody behind the bid, there's somebody behind the ask. Where is the stock going? What is it about this event that is getting me intrigued to trade? Why is it that I feel good or feel bad along with the way that the stock is priced, that the level 2 keeps blinking, that it goes up and down? What's happening? Well, that's that price impact. That's you talking about, oh, I just got a really good buy on the stock, or I got a good entry, or I got a good exit. That psychological event in your mind that says, hey, I did well, or hey, I didn't do so well. Okay? And then, of course, the patterns of price action reflect the mass psychology of all of us, of the markets and the participants. So those patterns are displayed in what we would call a chart. Okay? And the chart shows the mass psychology. It shows what you and I are doing collectively in the marketplace to affect the price of the stock. But all of this goes into what we call market psychology. The price, the chart, the movement, and all of that feeling that we get from the market can sway us, can make us feel different. So let me illustrate that for you in a bull and a bear psychology. This is pretty basic, but it's worth going over to paint the picture in your mind. The bull psychology is, I'm looking for long trading opportunities because I think the market's going to go higher. I'm a bull. And just the opposite, the roar of the bear is looking for short opportunities. And the bulls are associated with increased consumer confidence. When I, as a consumer, have a job, when I am making money, when I am out spending that money in the marketplace, I am increasing, my confidence is increased because all things are going bullish. The market's going higher, I'm making more money, I'm spending more money, I am fueling the economy. Okay, I am fueling the economy. Okay? And the bear is associated with the general decline of the stock market. When things start to go to hell in a handbasket, that's the bear mentality. It's associated with the general decline, the market going down. That's the bear mentality, as many of you know. And then lastly, if you're a bull, you have that increased anticipation of future capital gains. Many people in the market nowadays are bulls. You know, they have the bull attitude. They're investors. They invest their money and they say, if I invest now, I know that I'm going to get future capital gains, because that's what the market does. The market goes up, up, and up. But the bear says there's a transition from the investor optimism, or being optimistic about the market and going forward, to investor fear and pessimism, where people get fearful, people sell, people run for the woods. People are not used to having the market go down, and they react. The psychological aspect of that is where people are selling and running for the hills. Okay, so that's the bull and the bear aspect, or the bull and the bear psychology of the market. Let's also know that we have to understand specifically that we know that we cannot control the market. We can only analyze the market. The market doesn't know your name, doesn't know who you are, doesn't care about you. If you lost all your money today, nobody from the market is going to call you and say you're sorry. They're sorry. Okay? We only can analyze the market. The only things that we have control over in the marketplace is our entry, our exit, and our size. See, when you're trading, you can effectively enter a trade or not enter a trade. You can exit a trade or not exit a trade. You can trade 100 shares or 1,000 shares. Whether your account will do that or not, that's up to your account size, but you have control over when you get in, when you get out, and how much you have in the marketplace. But is it that simple? That's the question. Is it that simple? And the answer is a resounding no, it's not that simple. Because as you've seen and as we've laid out in this picture, the psychological effect of the market, the yin and the yang, the bull and the bear, the bid and the ask, and the outside influence of the market now with a president that tweets, the China situation, the weather, the Federal Reserve. There's so much out there that drives the market psychology that we are in right now, that it takes a psychologist and a trader to combine to be able to walk through a day of becoming or trading this market. Okay? So let's transition and talk a little bit about fear and greed. Fear and greed. Because fear and greed are really two emotions that really can take havoc on a trader and an individual. See, it's not just about trading. In life, we have fear and we have greed. Okay? We're made, each one of us is made of two primary emotions. And I've depicted them here, of fear and greed. Okay, both of these affect our mental and our behavioral state. They affect how we behave, they affect our mental aspect on our day. And each and every day, we come to a point within the day where we have fear and we have greed. It happens every day. You just have to think through your day as you go through it, not specifically just as a trader, but also as an individual. Okay? So, what is fear? Well, fear itself is an emotion that stops us from doing things that might be too risky. We are fearful to get into a Tesla trade because Tesla moves too quickly. We are fearful of flying because it might be too risky. And do you know, traders, that when we talk about fear, fear is about the situation where we have no control over what we're doing. And the example is many people have a fear or phobia of flying on an airplane. And here's the situation. The reason why you're fearful, is because you have what? No control. You sit in your seat and you put all of your trust in somebody that you've never met, you're probably not going to meet, or you could as you walk off the plane, but you give up your control of the situation to another person, and that's why you're fearful, because you have no control in the situation. So let me bring it home and talk about the fear of losing money and being wrong can be debilitating. Because you and I, when we're trading, we can only see the probabilities. We can't see the certainties. We don't know for a fact that if we get into this specific trade on the long side that we're going to have success, that we're going to be successful, that we're going to have a positive trade, that we're going to make money on the trade. Okay, so our fear is if we push the button, we could be losing money. And if we lose money, how debilitating will that be to you as an individual trader? You see, traders, there's many people out there that live so tight that if they were to lose $50 or $100 in trading, it might be the end of the world to them. And there are other people out there that lose $5,000 in a day, and it's not a big deal because they've been doing it for so long and they have such a large account, it may not matter. But when you have that fear, when you have that fear of losing money or losing money that you cannot afford to lose, it is a debilitating situation because we can only see the probability of the trade working out. We don't know for certain that it's going to happen. You don't know for certain that when you fly that you're going to arrive safely. Okay? You probably will because the percentage chance of something happening is very, 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 very low. But it's not certain. Okay? They call certainties two things, death and taxes, two things that have to be met. Okay? But the fear is what grabs us all. Okay? So how do you overcome fear? What are the ways that you as a trader and you as an individual can overcome fear? Well, first of all, you don't try to remove fear, okay? Because it's part of our behavioral state. Everybody has some type of fear. You're fearful from something, okay? I don't care who you are, you have some type of fear, okay? You have some type of fear. So as you start to understand that fear in itself is inherent to each one of us, understand it and learn how to control your response to it. And two keys to understanding it and responding to it would be, number one, develop patience. As an example, don't be pulling a plug on a profitable trade before it reaches its target. See, traders, when you get into a trade, you're always thinking, or the way that we teach is there's three criteria. It's your entry, it's your first profit target, or your first chance that you get to take a partial, and that's your stop loss. You should know those three before you ever push the button to get into a trade. But developing that patience is a real key to overcoming fear because it allows you to say to yourself that, you know what, I'm a great trader. I am focused, and this is what I'm doing, and I am setting this bar in the sand for this specific stock to get to. And I'm going to be patient because the road is going to be bumpy. But along the way, my patience is going to persevere. Now, the other piece is I need to develop some discipline along the way. And an example of discipline is not exiting a trade before it reaches its stop without fully having rationalized and reassessed the market beforehand. So be disciplined. Take the necessary steps before you exit a trade, before you reach your stop loss, without looking at the market. reassess the position, understand where you're at in the trade. And this is a heck of a lot easier to do when you only have one trade on. When you have 2, 3, 4 trades going at a time, it's very hard. Things start to happen quickly. But Dan Millman says it great. He says whether fear is your friend or fear is your foe depends on whether you become its master or its servant. Where you become its master or its servant. If you can master the way that you handle fear, you're going to see yourself in the situation, being in a fearful situation, but understanding that you have the patience and the discipline to rise above and to become better and to overcome your fear. Now let's switch gears and talk about what greed is. Greed is that excessive wanting. It's the longing that is out of control, okay? It's out of control. You want, you want, you want, and you want more. And greed can really never be satisfied or fulfilled. That ever wanting of whatever it is, of money, of food, of anything out there to be greedy over trades or family or whatever, it can never be satisfied. And it's related to our desire as individuals to acquire. It takes a little bit of greed to get into the markets, right? Because if you don't have that desire to acquire, then there's no reason to take action. Does that make sense to you? If you don't have a little bit of greed, you're not able to get into the trade because you don't have the desire to take action, the desire to acquire, the desire to take the trade. So you sit there and say to yourself, you know what, I'll just pass. And you just don't have the desire. So a little bit of greed is good. And I think Gordon Gekko had talked a little bit about greed in his movie on Wall Street, okay? And so did Bud. So it's important to have a little bit of that because that's what propels us as traders each and every day, okay? So how do you overcome greed then? How do you stop yourself from being too greedy, overly greedy? Well, you need to adopt a set of rules and you need to stick to those rules. And you really concentrate on getting it right. You really focus on being right in a trade. Okay? You don't get fixated on unrealistic gains. You don't sit there and say, oh, this stock is going to return double for me, or I'm going to make a home run, or I'm going to get a full point on this trade. Okay, those things are unrealistic. Those things are signs of greed. Like I tell our traders when I mentor to them, it's all about base hits, base hits, base hits. Consistency, discipline, a base hit a day, and then when you see that perfect pitch and you swing for the fences and you make a home run, then so be it. Okay, so be it. But it's the consistent base hit each and every day, taking a little bit from the market and understanding that there is going to be a home run. You will have a home run, and that perfect trade is going to come. So be ready for it. But each day, overcoming your greed and becoming confident and not overconfident. You see, like I said before, never think that the market owes you any money because the market does not know who you are. The market doesn't care who you are. You are a retail trader and you are as small as a pencil mark on a piece of paper to the market. The market doesn't know who you are. The market doesn't care who you are. Okay? And your overconfidence can get you hurt. Your overconfidence means that you're going to get up to the plate and swing for the home run each and every time. And that's really just no way to become a professional trader with consistency. Okay? So let's talk about the symptoms, and this will kind of bring it home for you to kind of do a gut check, if you will, to see if any of these are symptoms that you have. And I'm going to guarantee you one thing. I know that you're going to have some of these because I do. Even as a professional day trader, I have these symptoms each and every day. So a fearful trader is a trader that hesitates or misses trades, okay? Because you're fearful and you hesitate getting in because you're fearful of losing money. And the greedy trader is the trader that overtrades. They're trigger happy is what we call them. They just get in and start to trade, click the button, they're into this stock, into that stock, out of this stock, out of that stock, and they keep going. But you know what? That's a careless greed. That's a careless person. That's a person that really doesn't care. They're just in it for the fun of it. And a fearful person is really just too careful. Everything has to line up. There's the perfect time for the trade. Those of you that are out there that have children will know exactly what I'm talking about when I say that there's no perfect time to have a child. You talk to your spouse, you talk to your wife, you talk to your fiance, your girlfriend, or what have you, and you say, "Oh, you know what? Well, next month I get my bonus, and I'm going to let's start a family." Okay? Or let's wait until the first of the year, or let's wait until we get the job transfer. Okay? That's called being too careful. That's being fearful of what you're doing. Also, you can see here, being a spectator in the market is fearful. You sit on the sidelines and you watch trades go on without you. You watch other people make money. And then a greedy trader is a person that trades without proper preparation. Again, that trader that just gets into the market, pushes the button every single day, multiple times a day. And a fearful person is the person that gets, or the trader that gets stuck in endless paper trading. Endless paper trading. Okay? Endless paper trading. And the greedy trader is trading too big. Greedy trader is a trader that says, hey, forget about paper trading, forget about the demo account. Just let me go on the first day, instead of taking it slow and close to the best, they're in there trading well above their means. And in most traders, they get out there and they're trading 1,000 shares, 1,500 shares, whatever it is. They're just swinging for the fences because they want to get rich quick. Well, that's a little bit of too much of greed. And fearful traders give up too quickly, either periodically for a time or too soon. And, greedy traders are trading heavier when they're losing. They have the attitude that you've probably seen in Las Vegas or some friends or family, where you see somebody that bets and all of a sudden they're losing, so they double up. They double up. And let me stop right there and just interject this, that traders, and I don't know all of you where you are in your trading career, but I will tell you this one thing. Your first loss is always your best loss. And there's no reason for you to get out there and trade heavier than what you need to. Stay within your means, go for your base hits, and wait for the home run ball. Another sign or symptom of fearful trading is taking profits too soon. As soon as you're watching, if you're a trader that watches your P&L, as soon as you start to light up green, you're taking your profits. And the greedy trader is just trading wildly. They're going crazy. They're out there trading 50 trades a day. They're trading, up and down with the volume. One trade will take 500 shares, the next 1,500. There's no rhyme nor reason. A fearful trader is a trader that skips trades, and a greedy trader is one that doesn't have a proven strategy. So you got one person sitting there, I'm not going to get in. I think I'm going to lose money on that trade. The other person is saying, yeah, you know what? Oh, that looks good to me, whatever it is, or Scott said, or somebody said, let's get into this trade. I'm just going to get in, roll the dice. Another symptom of a fearful trader is one that moves the stops, moves the stop losses. And a greedy trader is one that's needing to have a trade on all the time. They're like a junkie. They're like a gambler. They always have to have something going on. Okay? And then lastly, this is interesting. A fearful trader is a trader that breaks their own trading rules and a greedy trader is a trader that breaks their own trading rules. You see, traders, it's fear and greed, but they are oftentimes experienced in the same day, almost at the same time. You tell yourself, man, I'm not going to get into that trade. It's too risky. And then that other person in you is saying, just get into the trade. It looks good. So you battle that. And the way you have to look at it is, how do I handle that? And what happens if I lose in that trade? What am I going to do? What am I going to do? Okay. And that kind of segues into what we want to talk about next, and that is, what are the common ways to actually lose in trading? What are the common ways to lose? Well, there's a lot of different ways that you can lose, and we're going to go over them right now. So missing trades, there's really three types of ways that you lose by missing trades. The first and foremost is not focused. Okay? Like I say to a lot of traders, I might be a little bit of a neat freak, okay? But you have to stay in the zone. And staying in the zone is not having a desk that's cluttered with a lot of paper, a lot of things going on. You can't really take trades while you're being distracted if you're tired or over emotional. Look, traders, if you believe that the sun is going to come up tomorrow, God willing, then today is just another day. And if you miss today because you're distracted or you're tired or there's something happening in your family, whether it's with your spouse or family member or an extended family, don't trade. Don't trade because you're not focused. You're not focused. A second way that you lose in missing trades is when you hesitate, especially after a loss. Now, I can already see it. I'll raise my hand right now virtually. My hand is up in my office. Have you hesitated after taking a loss? Of course. It makes you think, doesn't it? Especially when it's the first trade of the day. Many times I've traded, my first trade of the day has been a losing trade, and I've come back to turn my red day green. But there's been also many days that my first trade has been red and my day has remained red. Okay? Because I hesitated. Because I didn't believe in what I was doing. And then third is really creating trades that really have no logic and ignoring the trades that make sense. Stick with your rules. Traders, you are your own boss. You manage you. And when you have the logic and the ability to trade and to do it right, you have to stick with what you believe in. Don't try to be somebody that you're not. Don't try to trade other people's strategies. If you want to take a strategy and adapt it and adopt it to your own, then fine. But own up to it. Call it your own. Okay? But just don't create trades that are out there that really have no clue or aren't specific to what you're doing. Also, ignoring what the chart says. You know what, traders? I guarantee you one thing in life besides taxes and death, that the chart is always right. The chart is always right. Okay? And I know a couple of you guys are laughing out there, but the chart is always right. The chart doesn't lie. The chart, it is what it is. So don't ignore it. And when you ask the question, and we get it asked all the time, and I'm understanding of it, the question becomes, hey, Scott, why is this stock up when the market's down? What is happening with this stock? Well, you know what? As a trader, and I don't want to sound flippant, but I don't care. I really don't care. The chart is telling me that I need to get into this trade, or the chart is telling me to sell, or the chart is telling me to go short, because the chart tells me and guides me through my day. Another common way to lose is consistently trying to reinvent what the chart says by gazing at it. Now, how many of you out there, including myself, have thought to themselves, hey, you know what? I'm not going to go get a sandwich for lunch. I'm not leaving my desk because I'm in this trade, and I know, Scott, I know that if I look at it long enough, if I'm here in my seat, that this stock is going to go in my favor. I just know that. So traders, let me be the first to tell you, you can't reinvent what the chart says. You just have to go with what the chart says. And if you're in a bad trade, if you're losing money, then get out. Your first loss is your best loss, okay? And gazing at it, praying over it, or just gazing at it in general is not going to make it move. It's not going to make it move, okay? So other ways to lose. Over trading. How many of you out there have over traded in your life? Okay. Never, ever try to make up for losses or miss trades or trade from boredom. The profits, like we talked about, come from consistency, from discipline, from persistence, not a reaction to what's going on. So because the stock is going down and against you, why would you add to a losing trade? Why would you do that? Be consistent and persistent in your pursuit of becoming a professional trader. And then another way to lose is trading against the momentum or the trend. Never ever try to pick tops and bottoms. I've depicted it here with a small caption where the person is saying, hey, surely it's going to turn around. Surely it's going to happen. I'm going to buy more at the bottom because I think that I know that this stock is going to turn around and run. Let me be the first to tell you, you don't know anything. The chart knows what the chart knows, not you. Okay? Again, don't overtrade. And don't trade against the trend. Okay? Trade against yourself. And trade the momentum. The trend is your friend. How many times have you heard it? Several hundred, several thousand? It's a great saying. It's a great way to live and a great way to trade. Okay? Let's continue on and see what else we can develop here and take out. Also, a common way to lose is micromanaging those trades. Don't get out unless the trade hits your targets or stop. Let the trade run, okay? Overconfidence, the greedy overconfidence. You don't know where the market is going, and the market's not always rational. Remember what I just said, traders, okay? You don't know where the market's going. For you to ask yourself, well, why did the market do this? Why did the SPY, why did the triple Qs, why did the overall Dow go up today? Well, you have a pretty good understanding, I guess. I mean, we had a rally and things happened and the market was up a couple hundred points today. I get it. But don't try to sit there and think that you know all, because you don't. Warren Buffett said it best. If you find yourself in a hole, the best thing that you can do is to stop digging. Why do you want to keep digging if you're in a hole? Why do you want to add to a losing trade? Why do you want to do that and create more of a loss? Traders, your first loss is always your best loss. When you think it's time to get out, when you have set a stop loss, when you have broached that area of concern, when you get out there, you're going to save yourself time, money, and anguish later, because if that stock continues down and you're still holding, you're going to lose more and more and more and more. Okay? All right. Averaging. Do not add volume to losing trades. Why would you lose? Why would you add to a losing trade? It's inefficient, it's dangerous, and believe me, I know from years and years ago, it can wipe out your trading account. The common irrational belief is the worst thing that you can do as a trader is to add to a losing trade. Trust me on this one. Add to a losing trade and have that losing trade come out and you make fantastic money. You make more money than you ever had. That's the kiss of death, because, well, it worked once, I'm going to do it again. It's not a strategy that you want to employ. It's one of the strategies that will bankrupt you. One of the strategies that will cause you to lose your account. Now, averaging can be successful, a successful advanced tool when you add to trades that work. Okay. Many of the traders that are in our trading room that know me personally know that I love to add to winning trades because I know the opposite is true. When I add to losing trades, I lose a lot of money. When I add to winning trades, I make a lot of money. It may sound cliche, it may sound so common, but it's so specific and so right that you ask yourself, why do I have to add to a losing trade when I can add to a winning trade and come out even sweeter? Even sweeter. Okay. Now, how do we deal with losses and what do we learn from them? Okay, so you've gone over all the ways to lose. Now, how do you win? How do you deal with the losses? What do you gain from losing? Okay, it's not losing, it's just gaining more experience is the way that I like to say. So remember, trading is about the probabilities. And the market, like we said before, does not owe you a thing. It doesn't even know that you exist. It doesn't know your name. It doesn't know your account size. It doesn't know who you are. And it could care less about that. Check, are you on a learning curve? Of course you are. Every doctor out there, every pilot out there has to have ongoing training. Ongoing training. And at TradeNet, we do that each and every week. We have training each and every week. We have mentoring sessions every Thursday. We have every other week, we have some type of training that is good and healthy for our traders, coming from professionals, coming from people that have been there, done that, and have years and years and years of experience. And then know your weekly, your daily, your weekly, your monthly, and your yearly loss limits. If you were to lose $200 tomorrow, and that's your daily loss limit, you need to shut off your computer, you need to walk away, you need to go do something else. Go out to eat, go to lunch, go work out, get your eyes off the computer, start over the following day. Know when to hold them and know when to fold them. And every trade is new and every day is a new day. That's what brings us back as traders. We love to trade because each day is different. It brings a breath of fresh air into what we do. And the learning never ends. Like I told you, we're like pilots, we're like doctors, okay? We know that the learning never ends. We can pick up nuggets each and every day from experienced professionals. It's like playing golf. If you're a golfer out there, what happens when you play with a better golfer? Okay, some of that wears off on you. You watch the way that they grip the club. You watch how they swing. You watch their tempo. You watch how they putt, their stroke. And sooner or later, you play with that person, you're going to get better. So that learning never, ever ends. Now, after the trading day, you need to review the trades that you took and the reasons why you took them. Keep a log, and in your log, may I make a suggestion that you keep track of your entry and your exit points, your P&L on the trade, your mistakes made, but most importantly, the very most important out of any of these, I don't care about your entry and exit, your profit, I care about your loss, but your mistakes made and the reason why you took the trade. The reason why you took that trade is vitally important to learning. When you understand what you're doing and why you're doing it, on your losing trades only, you'll be able to fine-tune your strategy over time to rule those out and to become a better trader. Traders, we just have a few slides left and we're gonna stop for the day. Okay? But I wanted to review with you some general trading guidelines that everybody can experience as they start trading tomorrow. Trade with the trend. We all know about that, right? The trend is higher. I want to go long until I see a stock that is counter trend in a bad way. But for the most part, I'm looking for longs on a day that's trending higher. I enter my trades at clearly defined technical levels. Okay, clearly defined technical levels. I'm a breakout and breakdown trader by trade. So for me, it's all about the VWAP. It's all about whole numbers. It's all about trading on a breakout or a breakdown strategy. And exit losing stocks at your stop loss. Remember what I said, traders, and if you have to think it through, go ahead. Okay? You exit, your first loss is always your best loss. When you have a stop loss in there, you put that in there for a reason. So adhere to it. And do not exit winning trades, winning stocks too early. Okay? Don't do it. Take a partial, pay yourself first, and let the rest run. And you trade with the amounts that you're comfortable with. Okay, don't trade. Don't not make your mortgage payment next month because you've blown your account. Trade with money that you can afford to lose. Okay, and avoid trading according to rumors, and avoid trading in news, and avoid trading the first and last minutes of market hours. You know, I can't tell you how many times I've been emailed or messaged, private message, DM'd, and said, hey, Scott, look, I couldn't get out of this trade. It's the end of the day. And I go back and I look, and they're trying to get out of their trade with 30 seconds left in the market. Traders, do yourself a favor. The last 15 to 30 minutes of the market, you should be sitting back, writing in your journal, taking the time to understand your profession, okay? And understand what it takes to become a professional trader. So, traders, as I summarize today's presentation to you, I want to talk about market psychology. It's really what the trader, really what you and I experience at any given time during the trading day. And remember, do not try and remove your emotions, but try to control the way that you respond to your emotions. If you're a hot-headed person, if you oftentimes go off the handle, know that, accept it that you're that type of person and know how to deal with it. Deep breaths. Understand where you're coming from. Understand that the person across from you that you're barking at maybe doesn't deserve it, maybe that they do, but it's not a way to conduct yourself. The most important thing when you start trading is what? We talked about it, is survival. Okay? Surviving. Being there the next day, being there the next week, being there the next month, being there the next year. Okay? It's really to survive and get it right consistently through practice and discipline. A disciplined trader will win all the time. Okay? Practice, practice, and practice. There's many rules, but never ignore what the chart says because the chart is always right, like I told you. And don't micromanage your positions. Look at the bigger picture. Look at the chart. And remember, traders, the market doesn't owe you a thing. The market owes you nothing. Remember, the market owes you nothing. Doesn't know who you are, doesn't care about you. You manage you. You manage you. I'll end it right here. I'll end it right here. Those of you that are with TradeNet, you've heard me talk about this 1,000 times, and this is by far my favorite line and my favorite quote. Okay? My favorite quote. I have missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. No other than Michael Jordan. Traders, I appreciate you taking the time to be with us today in the seminar. Remember, the market doesn't owe you a thing. Take your time, get your discipline set, get your focus set. And if you want to join us, TradeNet.com, www.tradenet.com, and we are powering the World Series of Day Trading coming up September 17th. Take the time, invest in yourself, come try it out. It is free. It costs you zero, nunca, zippo, to come aboard, trade our platform, and be part of the World Series of Trading. Traders, Scott, thank you so much. I really appreciate the opportunity to deliver on trade ideas, and we really appreciate you taking the time to listen to us. Scott, do you want to open it up for any questions at all, or are we all set?
Well, we're up at the top of the hour, so it's time to end the webinar. But we just want to remind everyone we'll have a recording of this up later on tonight or tomorrow, and they get an email reminder tomorrow with a link to the playlist. And thank everyone for signing up for the webinar, and thank you, Scott, for your presentation.
Okay. Thanks again, Scott. Thank you, traders. Everybody have a good night. God bless. Godspeed, and thank you for the opportunity.
All right. Thank you all. Have a good one.
Thank you. Bye-bye.